Hey, it's Sammy. On Friday, June 20th, we took 18 trades today for 479 points in Dow futures. The primary reason there were so many trading opportunities today is that there were $6.5 trillion of options expiring, making the market swing wildly. So the market, when we came in early this morning, about 7:30, you could see it was just compressed, completely consolidated. We got a little bit of short time frame data breaking this consolidation. We're breaking through the value area high, so we're going long. Now we're going to start trailing our stop loss up. Ultimately, we're going to end up trailing to a plus 35 and lock in 35 points on this trade. All right, look to the left. We got out of that trade. This is going to be a break-even trade, but that market flew after we got out. And we're still trying to go long here to fill up that wick to the left, and we're going to take another break-even trade. That's okay. We'll look for the next opportunity. All right, so you can see we have the flag pattern. You can look over here. I just framed it in just for fun. A lot of these patterns, they're theories, they're strategies based on theoretical probabilities. So we have the data to actually confirm that. We're going to go ahead and take this long. Now, I will tell you, this is a bit of a Greek tragedy. We did watch this market. It pins our exit, but it didn't fill our order. We manually closed the trade. We only ended up with 23 points, but we did hit that take profit level. This is another one of those crazy moments here. We got our stop loss moved to a +3. Watch this thing spike. All of a sudden, we got all this data. The market's really volatile right now, and it spikes and it comes back and hits our +3 break even or stop loss. Look to the left. This is why we're long in this. We got back in the trade. It's just chopping its way back up to that overnight high, pin to the left, and we're trailing it. It's very volatile, so we're going to end up with +12 on this. So we're just following the data. I mean, the market's longing. You can see how it's behaving. There is still plenty of headspace left here. There's a lot of volatility, a lot of sentiment. We're in this trade long. So you can see we're hitting ADR here. We're already hitting ADR, and it's like not even open market yet. We're going to actually go ahead and just close this out with +30. All right, the market pulled back, hit that little area, that green line. We are going to go back in this market and punch through ADR one more time. All right, we're ending up with +30 points on this trade as it shoots up really long and aggressive. Now we're rejecting ADR. We're at the open here. We're going short. We hit a break even on the first one. The data on the short side is still there. We're going to jump in and go down to this checkpoint right here real quick. As we go through it, we're going to trail our stop with that +30, and we're going to hit +30. You have to understand how the market behaves. It had to find a value in order to continue long. Now it did, and all the data swung back over to the long side. Now we've identified 1 hour resistance. We're also hitting this blue band and a GAN level with that purple line. We're going to manually lock in 50 points here at deviation 2. You could see after the market faded away off deviation 2, the data kicked in, we got back in. We're really hitting a ceiling here, so we've got that trade protected. It's going to turn out to be a break-even trade. That's okay. Next trade. Now we're ready to get cranking here. We're actually coming short off the high of day, off the 1 hour resistance, coming back through the overnight high prior to the open. This is where all of our data flips over, and we are going back down to the value area high. We're going to trail this very aggressively, and ultimately it just rages down and hits our 86 points take profit. All right, now we're coming back through volume point of control. You can see over to the left, we took that short. Now we found value in the market off deviation 1. We're going long again. I probably should have closed this trade when we hit open and I had 30 points. I just decided to trail. We're going to trail with 14 points and it gets hit. All right, so now the market's dropping. I missed the first drop to the left. It did pull back nicely for me, so we're gonna go ahead and take this short time frame data to the short side. Now, because we don't have the strongest amount of data, I'm running my trailing stop strategy, and we're going to get hit with plus 31 points here. We hit our trailing stop to the left. We are getting back in because the market came back up to my drop zone that I've identified. That's where the market's going to fall from. So we're going to go ahead and get back in. You can see the market already went down and tapped that checkpoint. We're going to go ahead and drag our stop loss to plus 46 points, right where that checkpoint is, and lock in that profit. You can see we bounced right off of that checkpoint. We're coming back. We got the data. We're jumping back in again to go short. We're at the 23.6 Fibonacci. We're heading down to yesterday's close. We're going to drag our stop loss to a plus 30 right at that yesterday close tracer and lock in 30 points. All right, all of that short time frame data has flipped over. We are going to the long side now. We've got decay on all the other data, and we can see we're going to try and punch our way all the way up through this 200 moving average. Now, because we're only working with short time frame data, that's why we're really aggressive in moving that stop loss. We're going to lock in another plus 30 points. When there's this much opportunity, we just stay trading. I missed the trade to the left. I literally went out, had an espresso, came back, and wow, and look, the market pulled back, gave me an opportunity to jump in. We've got short time frame data, but we're right here at value area low. Almost hit my plus 4 break even stop loss, but we're going to punch down and lock in 29 points.